Anybody can buy Bitcoin and have all the downside and all the upside and all the volatility. But what if I want half the upside but no downside? Well, would you rather own $1 billion of real estate in New York City or $1 billion of Bitcoin or $1 billion in Cyber Manhattan? But if I was talking to Apple, I would say, don't buy back 100 billion of your stock. Buy 100 billion of Bitcoin. It will go to 500 billion. You'll have a $500 billion business growing 20% a year. You'll make 100 billion in investment gains a year. Your investors will look at it and they'll add $1 trillion or $2 trillion to your market cap. And now the company will be valued 60% based upon the operating business.
Capital flow is a crucial driver in global financial markets, with investments often shifting from weaker assets to those offering stronger returns and stability. Traditional assets like real estate and fiat currencies have seen substantial depreciation, leading investors to explore alternatives. In a recent interview with Madison, Saylor, former CEO of MicroStrategy, discussed Bitcoin's rise as a transformative asset, marking a shift from 20th-century analog holdings to 21st-century digital financial instruments. With an annual growth rate averaging around 50% in recent years, Bitcoin has established itself as a significant player in the global financial ecosystem. Its potential for high returns and role as an inflation hedge have attracted substantial interest from both retail and institutional investors. As the digital economy expands, Bitcoin's influence is expected to increase, making it a critical factor in the evolution of global finance and capital allocation strategies. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
MicroStrategy is really just providing a set of institutional instruments that institutional investors can use to tailor a portfolio that's long, short, hedged. They can sell the volatility, they can arbitrage the volatility, they can arbitrage any instrument against any other instrument, they can generate yield, they can buy insurance. Some of those people that are short, they'll short $1 billion of MicroStrategy and they'll buy $1 billion of Bitcoin. And so if we didn't exist, then billions and billions of dollars of capital from the traditional finance markets wouldn't be invested in Bitcoin because they can't buy or hold the underlying crypto asset. They can only buy securities or bonds or options or other instruments. So we become an institutional gateway for crypto exposure by all types of investors. And my real aspiration now is, if you really hate Bitcoin, I want you to love us. Like, we're the perfect instrument to short, right? Because I promise you I won't sell it, right? We're going to be levered long Bitcoin, and if you don't like it, or if you just want to hedge it, you get to sell our stock or sell puts or buy puts, right? And the worst thing I could do is to take your side of the trade or to interfere with what you're doing. So I think part of MicroStrategy's rise to prominence in the space is we have been laser-like focused, we're very consistent, we're very transparent, we're going to buy Bitcoin, never sell Bitcoin, we're going to borrow money intelligently. If you like Manhattan, and if a company said, I'm going to borrow $5 billion at 1% interest, and I'm going to develop real estate in Manhattan, you might think that that's the kind of company you would like to invest in. But if you hate Manhattan, and we're 150% exposed to Manhattan, you get this investment thesis, like, that's the company I want to short. And the most important point in the marketplace is you just have to be very pure, true to your focus, have integrity and consistency and transparency, because it's not my job to trade, hedge, arbitrage, or construct that portfolio. There are guys with hundreds of millions or billions of dollars in a Bloomberg, and that's what they do every day. So my contract with them is, we're going to do what you can't do. we're going to buy Bitcoin, hold Bitcoin, and we're going to issue equity and we're going to issue debt instruments. And you can't do that because to do what we did, you have to start with a very small company, a $1 billion company, and then we become a $40 billion company, and now we're 150% Bitcoin. So if you take another $1 billion company and do what we're doing, you can't catch us. Because at this point, we can grow $5–10 billion a year in capital or faster. You can't catch us if you start with the same thing. But if you take a big company like Google or Meta or Microsoft or Apple, and they took $50 billion, and they bought $50 billion of Bitcoin, well, that would be good for Bitcoin, and that would be good for their shareholders. And if Apple did it a lot, they might add $1 trillion to their market cap. But it would be $1 trillion on top of $3 trillion. So at the end of the day, Apple would be an enterprise, 25% Bitcoin, 75% Apple. MicroStrategy is an enterprise, 150% Bitcoin. So how do you create a company which is 150% Bitcoin that can sell billions of dollars of fixed income instruments or billions of equity into the market with a permanent capital base that's going to oscillate, it's going to vibrate with the frequency of Bitcoin?
Michael Saylor discusses how MicroStrategy acts as an institutional gateway to Bitcoin, offering financial instruments such as securities and bonds for indirect exposure. The company is currently 150% invested in Bitcoin, utilizing leverage to expand its holdings without plans to sell. Unlike larger firms, MicroStrategy's performance closely mirrors Bitcoin's price, making it a distinctive investment vehicle. Saylor emphasizes the trend of capital moving from weaker to stronger assets, citing the depreciation of the US dollar in comparison to Miami real estate and the Argentine peso. He believes Bitcoin's growth signifies a transition from traditional analog assets to the digital economy, noting its impressive annual growth rate of 50%. Saylor predicts that Bitcoin's volatility will decrease as major corporations begin to invest, aligning their performance with leading technology firms. He suggests that companies like Apple could bolster their market capitalization and financial stability by investing in Bitcoin. Let's return to the interview and watch more clips to gain further insights from Michael Saylor.
Its capital flows to where it's treated the best. And so if I have capital, in Argentina, I would put it in the US. And if I have capital in the dollar, let's take the dollar. 100 years ago in Miami Beach, an acre of land on the waterfront cost $10,000. Today, $10 million. The dollar lost 99.9% of its value against real estate, waterfront property in Florida. Okay, is that a glitch? Right? And the peso lost 99.9% of its value against the dollar in 20 years. Is that a glitch? That's really just capital flowing from a weak asset to a middling asset to a stronger asset. And Bitcoin's advance is capital flowing from 20th century analog assets, financial and physical assets, to the 21st century digital economy. And it's going to go fast early on. It went really fast the first decade. It's been going 50% a year ARR for the past 4 years. But as the 1 trillion equalizes with the 400 trillion, and this becomes 200, when this becomes probably this 450 trillion will become 700 trillion, but this 1 trillion will become 100 trillion. And so as this becomes a fraction of the 20th century economy, the difference between the cost of capital in the Bitcoin universe, which is 50% right now, and the cost of capital in the dollar universe, which is about 12 to 14%, look at, basically that's the return of the S&P. So the S&P sets the cost of capital for traditional conventional assets, and Bitcoin is the opposite. And so Bitcoin is like 3.5 times. If you look out 10 years, instead of 50 vol versus 15 vol, maybe it'll be 45 to 40 to 38 to 36 to 32 to 28. This volatility is coming in. This ARR is coming in. Now this comes up. Because what happens when Apple and Google and Microsoft and Facebook or whatever, when they buy Bitcoin? What happens when you could take the bottom 98% of the S&P 500? If they bought Bitcoin, their performance would start to approach the big tech. And so the performance of the S&P index will move toward Bitcoin as they put Bitcoin on the balance sheet. Bitcoin performance will move toward the S&P as we move from, a 100 to 1 ratio to a 10 to 1 ratio to a 5 to 1 ratio. And these things equalize. But if you understand it as thermodynamics and collapsing into a more efficient energy state, like, how is it not more efficient to be able to teleport a building 60 times a second between New York and London? Like, that's efficient. Versus your family made an investment in London 30, 40 years ago, and they changed the law last month, and now you're going to lose all your wealth. That's inefficient, right? So Bitcoin is the digital transformation of capital. MicroStrategy is just a business taking advantage of the digital transformation. But if I was talking to Apple, I would say, don't buy back 100 billion of your stock. Buy 100 billion of Bitcoin. It will go to 500 billion. You'll have a $500 billion business growing 20% a year. You'll make 100 billion in investment gains a year. Your investors will look at it and they'll add $1 trillion or $2 trillion to your market cap. And now the company will be valued 60% based upon the operating business, 40% based on the balance sheet, right? And the risk will shift.
Bitcoin is currently holding gains above the $67,000 resistance zone, with its price consolidating and targeting further increases beyond $68,350. It remains stable above $67,500 and the 100-hour simple moving average, while a key bullish trend line forms support at $67,400 on the hourly chart. If Bitcoin manages to close above $68,276, it could potentially reach $71,500 or even $72,000. However, if it struggles to break above the $68,000 resistance, a decline may follow, with immediate support near $67,200 and major support around $66,500. Should the price drop further, it might test the $66,000 zone, with additional losses pushing it towards $65,500. Technical indicators suggest Bitcoin is still in a bullish trend, with the hourly MACD gaining momentum and the RSI remaining above 50, signaling a positive outlook. Key support levels are at $67,200 and $66,500, while resistance is expected at $68,000 and $68,400. If Bitcoin breaks through these resistance levels, it could trigger further gains, reinforcing the bullish sentiment. As we wrap up, the situation remains fluid, with Bitcoin poised for either continued growth or a potential retracement. What are your thoughts on Bitcoin's growing integration into the global economy? Do you believe it will continue to play a vital role in the digital transformation of assets, or will traditional investments remain dominant? Please share your thoughts in the comments below. For more Daily Dose Crypto News, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.